just take a look at one more example, right? So the main market sentiment. What is the main market sentiment, right? We're pushing up. Okay, we're pulling back, we're pushing up, we're pulling back. We start to push up, right? We're getting liquidity generation below these lows. Okay, we then pull back, take the liquidity from the lows, generating more liquidity above these equal highs. Okay, but what happens here, right? We get the sell through the liquidity. Okay, we then break to the top side. We use the liquidity on the top side to move us back down into this order block in which we can accumulate positions and then take the market through the top side liquidity. And once again, we move into the top side liquidity, we accumulate positions, we run stops, we mitigate these stops, move price into areas of sell side liquidity in order to generate our positions, move price higher, okay, run price, move to the downside, generate liquidity, tap into that, move price. So that is the premise of this video. That is the premise of understanding institutional order flow. Okay, so alright guys, welcome back to the channel. So my aim for this video is to give you as much insight and as much objective information on institutional order flow. So I'm just going to get straight into it, straight to the point, show you some live examples on the chart, why it happens, what to look out for, and then obviously how you can then apply this to your own trading and how you can, you know, capitalize off of these moves as the institutions do. Alright, so what do I mean by order flow? So basically order flow, or what I mean by order flow, is how the price is delivered to us, right? How it's manipulated, how the orders are flowing through the market, right? And how we can capitalize off of these moves. Right, so first of all, we need to understand how moves are formed in the market. And again, I'm going to keep this brief. I'm sure a lot of you already know if you've been following this channel, right? So if let's say we're pushing up, right? We're in a trending market. That is terrible. Okay, right? We're pushing up. We're in a trending market, right? Obviously, we know that as soon as we push up, pull back, and we start to move higher, there's going to be people anticipating this and buying the market. Okay, so they're going to have stop losses below this level, right? Buy in the market, sell stops below this level. Okay. Again, the market retraces, right? What's going to happen? There's going to be people that are starting to sell the market, right? So there's going to be stop losses above this level. We pull back, right? We start moving higher, stop losses below this level. Okay, so all like around here, right? Here, there's liquidity being generated. Obviously, for those of you who have a greater understanding, there's liquidity all through here. There's liquidity all over the place, right? But the main liquidity pools, okay, so the main liquidity pools are going to be at these main swing points. Now, obviously, this may sound repetitive for those of you who have followed a lot of my content, but make sure you hear this out, okay? Because I'm sure this perspective, this demonstration is going to add a lot more clarity to your understanding as it is, okay? A different perspective to your understanding, right? Institutions obviously understand that there is liquidity below this level, okay? So what we'll often find, okay, and this is what I mean by order flow, okay? How the orders are flowing, how price is being delivered to us in the market, right? This is what we want to understand. So institutions at this point understand that there's liquidity at this level, right? So price gets delivered, or they sell down through this liquidity, okay, capturing these stop losses, right? Taking the liquidity from that level so they can then push the market higher, take the liquidity from the top side, okay? So obviously we know that this is a stop hunt or an order block, right? An institutional candle, liquidity run, whatever you want to call it, okay? It's just understanding the flow of the orders, how price is being delivered to us. That's what we want to get through today, right? So we know that there's been a sell to buy model in this area, So as price comes back down, okay, starts pushing up, we're generating some more liquidity, and we tap down into this level, right? We understand that this area is an area of interest in which we want to look for some accumulation and a push higher to then run the liquidity from the top side. Okay, so ultimately we are looking at where the orders are resting and how the flow of the new orders are coming to take the liquidity, right? So we're just looking at, again, sounds simple, the flow of orders, right? And how price is being delivered to us. So let's take a look at some examples, right? So when we're thinking of institutional order flow, right, we want to think like an institutional trader, okay? So we want to be looking at where is liquidity lying and where does price want to move to in order to fill that liquidity, okay? So if we just take a look, right, we obviously can see that there's a swing point here. The market sentiment has been moving down, right? There's most likely going to be liquidity above that level. Okay, we've most likely got liquidity above these highs, right? These highs. And below these lows, okay? And obviously above these highs as well, right? So as the market's pushing down, right, let's just think about what is actually happening in terms of the way that the people are viewing this market, right? The market started to move up. There's most likely going to be people buying and putting stop losses under here, right? You can see that we've been moving down, okay? The market's found some resistance. Most likely people are going to be buying this market and put in stop losses above here. On the flip side, the market's been moving down, right? We found some resistance. People are going to be selling this market and putting stop losses above here. Okay, so we've identified that there's liquidity on both sides of this market. Okay, now you can see that we start to push down, right? So we're starting to push down and we sell into the liquidity that's generated here, right? Or the liquidity that's been engineered here. Okay, that gets taken, right? But also what happens, right? So as we're pushing down, we create a high and then there's more liquidity on a lower time frame being generated above these highs. Okay, so we're pushing down, we pull back, people are selling. Liquidity above these highs. Okay, so we've taken the liquidity from below these lows, right, and used it to take the liquidity from the highs. Okay, so the way that the orders are flowing, right, we're taking liquidity from one side, or using, sorry, the liquidity from one side to then fill orders, to fill our position, to take the liquidity from the top side, right? So liquidity's been taken from there, right? We understand that there's liquidity above these highs as well. Okay, again, what's happening, right? We're pushing up, we're pulling back, right? Liquidity generation. Okay. We're moving higher. Now, the other thing that we could also use this to get involved, right? In the understanding that this is a sell to buy. Okay, so we've sold into this liquidity and now we're pushing price higher, understanding that this is most likely a high probability level of mitigation that we can use to enter a position here to then take price higher. Okay. But at the same time, we understand there's also been liquidity generation below this low, right? We take the liquidity from the top side, pull back, generate some liquidity, okay, on the pullback, right? Generate liquidity on the pullback. Generate liquidity on the high, right? What happens? we push up, we run the high side liquidity, we run the top side liquidity, okay? Once we've run the liquidity, we pull back down into the sell side liquidity and we run that as well. Okay, so again, we've got the buy to sell, right? Okay, so if that's unclear, let me just go through that again, right? So we push up, we pull back, right? We generate liquidity below this swing point. We push up, use the liquidity above this level to get below this swing point. Okay, and then we accumulate positions through here, right? Accumulate positions through this level, okay? Taking this liquidity, marking up price, okay? Now, obviously, we understand that if the price comes down to this area, okay, this is an area that we may want to pay attention to look for potential reaction, okay? Because obviously we've seen a sell to buy model here, right? And where are we going to look to? Obviously, we know we've got untapped liquidity above this high, this high, this high. Okay, and without getting into the concept of imbalance, obviously we've got areas of imbalance through there as well, right? So again, we come back down, but before we tap into this order block, right, let's just get rid of some of this. All right, what do we do? Okay, think about order flow, right? Where are the orders resting? As the market sentiment is being delivered to us, where are the orders being placed in the market? Okay, so look, we get a break above this high, we get a pullback, right? We get a break above the high. Liquidity generation below this level, okay? We already know that we've had a sell to buy model here that took this liquidity, and we've also got liquidity that's being generated through here. Okay, price gets delivered into this area, takes the liquidity from this from the pullback. Okay, also taps into the order block, and then we see higher prices. Okay, that liquidity got taken. Right. Higher prices. Okay. All right. So let's reset. Right. Where is the liquidity now in the market? Without breaking it down too much, obviously, without using multiple time frames, we've got liquidity through a lot of these levels, right? But we know we've got liquidity above here and above here as major swing points. Okay. Most likely had some liquidity generation through there, which we then ran, pushed up, tapped back down into that order block, and then seen higher prices from. Okay, so short term, pullback, right? Pulling back, pushing up, people start to buy, place their stop losses. Okay, the liquidity gets ran. Right, we then pull back, push up. Okay, liquidity gets generated. Come back down into this order block, tap into it, generate some liquidity, Price then gets delivered above these highs, right? Taking this liquidity. That's been taken, right? Where do we come to? We pull down, we take the liquidity from the sell side. Okay, so the point of understanding order flow, or the point of this video, is to help you understand that price wants to move or uses areas of liquidity, okay, to generate positions to then move price into other untapped areas of liquidity, in turn generating more liquidity, right? And that is ultimately order flow. Now, I know that is, it's a bit of a broad description of order flow, okay, but this is how I want you to start viewing it, right? That the price moves from areas of liquidity through areas of imbalance into areas of liquidity. Okay, so again, What do we know here, right? Let's just keep going. So we know that we've had a sell through the liquidity. What is price going to do? Okay, so we move higher, right? Again, we take liquidity, right? Understanding that this was a sell through into this liquidity, which then pushed price higher. Okay, and for those of you who don't understand this, I'm highlighting this because this is our order block, right? Now, some of you may, depending on, you know, how you've been taught, some of you may think of an order block as like the last down candle before an up move, okay? Which in turn would be this. Now, that's not necessarily wrong, okay? But right, and that's not necessarily wrong. It can be. Obviously, that can be the case, okay? It can be a last down candle before an up move. But what you've got to also appreciate that the Forex market, or the way that we view the market, is fractal. Okay, so basically what that means is that we're viewing the same price action on different time frames. Okay, so basically this move where it starts here to here on a 5-minute time frame is made up of 3 or 4 candles. If I move out to a 15-minute time frame, then the price is going to be made up of 2 candles. Okay, in which case this is the last down candle before an up move. Okay, well that's, you know, this is the last. In fact, that's not very. Let's go to, don't know what, maybe a 7-minute might be a bit better. Okay, so look, now this is the last down candle before an up move. Okay, so it all depends on where you're viewing price from. We was to go to a 1-minute, right? Oh, can't go back that far. Alright, so I'm not really sure where I got to on this, but it was around this sort of point, right? So you've got a basic understanding now, or for those of you who are new to this concept, you've got a basic understanding. Those of you who are obviously, you know, you've been listening to the content, you're going to understand a lot more. Okay, so we start pushing up, we pull back, we find resistance. Okay, we get some liquidity being generated through there, right? We then sell down into the liquidity, right? We push up, pull back, get liquidity generation, push down, mitigate from that level. Okay, we push up, pull back, have liquidity generation through there. Okay, let's just make this a little bit thinner. Right, we get liquidity generation as we're starting to push up. We then run the liquidity. Okay, market starts to push higher. We pull back into the liquidity, start accumulating orders before potentially taking the market higher into this liquidity. Right, we take the market higher, and as we take the market higher, people are buying. Okay, so people are buying through here, generating liquidity. Okay, as we sell through, okay, we use this liquidity, we use the buy side liquidity to sell into the sell side liquidity. Okay, in anticipation that we're likely to take this market higher, potentially. Okay, the market gets taken higher, right? So now where are we interested in? Okay, well, we started selling through this area, okay, using this selling through into this liquidity. So this is now our area of interest, or our order block. Okay, or again, you know, this video isn't to do with order blocks. This can be refined. Okay, this area can be refined, but for this the purpose of looking at this in terms of order flow, okay, we're going to be looking at this as our order block, right? So what we're anticipating is potentially price to pull down, potentially generate some liquidity, which we then sell through, okay, into this order block, take price higher. Okay, generate liquidity from the top side, taking liquidity from the top side, pull back down into this order block, right? before taking price higher. Okay, so that's what we mean by order flow, okay? Well, that's what I mean by order flow, okay? That's what I want to sort of make clear, or, you know, bring to your attention in this video. Okay, so potentially got some liquidity on the lower time frame below there, right? The liquidity gets ran. Liquidity generation, okay? Liquidity generation, which then gets ran. Right, we push higher, okay? So now we understand that there was liquidity being generated through here that we ran. We used this order block, okay, which ran this liquidity to accumulate the position and take the market higher, taking the liquidity from this top side. Okay, so now we're interested in, let's just delete some of this, the order block that took the liquidity from this side. Okay, so as we take the top side liquidity, generating liquidity that may have just been ran. Okay, we sell down through. Okay, so we sell down through this liquidity, generating some more liquidity, taking liquidity from the top side, which we're most likely going to use to push down either into this order block or into this order block to take the market higher, right? So again, the sell down through, taking the liquidity from this lower side or generating liquidity. Sell down through. Push up, tap into that order block, taking the liquidity from the top side. Okay, liquidity generation, the sell down through, right? Generating liquidity. Again, liquidity from the top side. What's happening here? We can see we got a push down, a pull back, a push down. People are anticipating this as a sell. We run the liquidity, right? We get a pullback into this area, which ran the liquidity from this low here. We then move higher, okay? Take the liquidity from the top side, taking the liquidity from the top side. Okay, so hopefully this is becoming more apparent now. You know, the flow of orders, how price is delivered to us through using areas of liquidity. Okay, right, this here is institutional order flow. Okay, this is the footprints of institutional order flow, right? So again, what happened? We had liquidity generation, a sell through the liquidity, okay, a tap into this liquidity or into this order block, and then a move away, right? Market moving higher, liquidity being generated, right? People are buying through here. Okay, what happens? Liquidity gets ran. Okay, we sell through that liquidity. We've got liquidity on the top side now, right? We tap into the order block here. So if you look, right, here would have been a very similar situation to this on a 1 minute time frame. Okay, so this would have been a pullback, a push up. There would have been liquidity generation. Okay, we then get a sell through that liquidity. This is our tap into it, right? We then anticipate price to move higher and then tap into this sell through of this liquidity. Okay. So we get a push higher. Again, right, price respects this level, okay, creating more liquidity, which we then run through, generating liquidity in this area, which we then sell through. Okay, we've now tapped into this order block, okay, that ran this liquidity. Now we're expecting price to get delivered higher and take out these highs. Okay. So again, price gets delivered higher, we then take out the highs, right? Liquidity generation. This was the run of the liquidity. We got liquidity generation there, there. Okay, we had some here. This ran through that liquidity. We then broke above it and tapped back down into it. So we may not get a pull back into this main area. I would say we would, based on the flow of orders, okay, because we've got liquidity being generated here and here. So I'd like to see this ran, a tap into this order block before seeing higher prices, okay. Okay, so that ran this liquidity, right? Again, what happened, right? We start to pull back off of this high. Let's just rewind this, right? We start to pull back off of this high. Okay, as we start to pull back off of this high, we make a low, right? Which again, we've got stop losses below, right? Stop losses above this high, stop losses below the low. We then push up, use the stop losses, the buy stops and the limit orders, right, in order to sell through this liquidity. Okay, so that you can see we then sell through this liquidity, doing what? Creating more liquidity. Okay, then imbalances, right, in price. Where do we come to? Well, we come to this order block through here, okay, which ran this liquidity, and we're also in this bigger order block, the higher time frame order block, which ran this liquidity. So what do we expect? Well, I'm expecting price to accumulate, potentially run liquidity below this level, some long positions, and then deliver price higher, right? What we actually do, we break this level, okay? Again, sweep liquidity, sweep liquidity. We then push higher, potentially get a tap down into this level again. Create liquidity, which then gets ran, right? Create liquidity, which gets ran, okay, so liquidity above here, which we then run, we break down, tap back in to mitigate, to then see potentially lower prices, right? Liquidity generation, a sweep of that liquidity, lower prices into this order block through here, okay? Tap into this order block, expecting to run this liquidity, and this liquidity. Okay, we might not, we might tap into this order block and see a rollover again. But that's what I'd be expecting, okay, based on the way the price has been delivered. Okay, so let's just clean this up, see what we do. Liquidity generation, sell through, right? Liquidity generation, that's the order block that we tapped into. Okay, we then took the liquidity from the top side, pulled back down, pushed up, creating more liquidity. Pushed up, creating liquidity, we then sold through it, right? Where did we come to? Well, on this move, you can see that we pushed up, we pulled back. Let's just make this a bit clearer. We pushed up, we pulled back, started moving higher, generated liquidity, and then sold through, okay, giving us an order block. Right, we then pushed up, pulled back, generating liquidity, okay, we then sold through, giving us an order block. right? As price comes down, we tap into this order block and we take liquidity from the top side. We pull back, we create liquidity. We then run through liquidity, giving us an order block, right? We run this liquidity, giving us an order block. We push above, tap down into that, expecting potential higher prices, okay, to take out the liquidity above this high, okay, and this high here, okay. And for those of you who are familiar with the Wyckoff schematics, you'll recognise this move, okay. Now this doesn't mean that this is going to happen, but based on the way the price has been delivered and the order flow, I'd expect to see higher prices taking out these highs, right? Okay, and we don't do that, right? And we don't have to be right all the time. But let's take a look at what happens, right? So if we just remove this, the exact same thing happened on the lower time, on the opposite side of the market, right? So you can see that we took liquidity from the top side, we then used it to push down, create liquidity here, and took the liquidity from the sell side, right? And through here. We then used it to push up and take the liquidity that was generated here, okay? We then pushed down, right? Liquidity generation through there, I don't know if you can see, but we then use that to mitigate and then take the liquidity that we generated here, okay? We then pull back up, create some liquidity, sell through that liquidity, giving us an order block, right? And you can see that we've got some accumulation down there. So this now may be the run of that liquidity, taking the liquidity that was generated here, here, and what we was looking at earlier above here, okay? Obviously you can see that we've also had a trend line being generated, which people are going to be selling and putting stop losses above these trend lines, okay? Okay, so we get a tap into that order block, a push above. We use that to go lower. Oh, there's some of this, so it just looks a bit cleaner. Okay, so we understand that we've got liquidity, 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 right? We've just ran some liquidity through there. So we're also generating liquidity here that we may want to manipulate to use to take this higher, okay? So we push up, generate some liquidity. We then use that, it looks like, to either tap down into this order block or run the liquidity from here to create an order block, which we then use to see higher prices. So we use that as propulsion into this liquidity, giving us a larger order block through there. Liquidity generation, okay, a sell through the liquidity, a break above, a tap down into the order block, taking this liquidity, and most likely continuing higher to take the liquidity from the top side, okay? Maybe not. Okay, so a sell through, a tap down into the order block, a push higher, taking liquidity, taking liquidity, taking liquidity. Okay, what do? We pull back, we generate some liquidity, right? Generate liquidity, which we then take. Pull back, generate liquidity. Pull back, generate liquidity. What do? We tap into this order block that ran this liquidity. Where do we go? Below this level, okay? That took this liquidity. Moving higher. Liquidity generation. A sell up through. Okay, into an order block. Liquidity generation. Liquidity generation. A sell through, a move higher. liquidity generation. Alright, so hopefully that is starting to become more apparent. We push down, sell through the liquidity, okay, we break above, right? We break above, we create some topside liquidity before we come back down into this order block, and then we take the topside liquidity, right? So that there ultimately is what we've been looking at through this video. Okay, that is the premise of institutional order flow. Let's just take a look at one more example, right? So the main market sentiment, what is the main market sentiment, right? We're pushing up. Okay, we're pulling back, we're pushing up, we're pulling back, we start to push up, right? We're getting liquidity generation below these lows, okay? We then pull back, take the liquidity from the lows, generating more liquidity above these equal highs, okay? But what happens here, right? We get the sell through the liquidity, okay? We then break to the top side. We use the liquidity on the top side to move us back down into this order block in which we can accumulate positions and then take the market through the top side liquidity. And once again, we move into the top side liquidity, we accumulate positions, we run stops, we mitigate these stops, move price into areas of sell side liquidity in order to generate our positions, move price higher, okay, run price, move to the downside, generate liquidity, tap into that, move price, okay. I hope you got value from the video. If you did, be sure to hit the like button, subscribe to the channel, and wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.